Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about warning all attempts failed. Could not retrieve company long name, CBLL, quarterly report. CERIBELL Inc., a medical technology company based in the United States, specializes in developing innovative solutions for patients in acute care settings. The company's flagship product is the CERIBELL system, an EEG platform that utilizes AI-powered seizure detection algorithm called Clarity. The CERIBELL system consists of several key components, including disposable headbands and head caps, a pocket-sized battery-operated recorder, and an EEG portal that enables real-time, remote access to patient data. This comprehensive system is designed to provide accurate and timely diagnosis and treatment for patients in need. While CERIBELL Inc. offers a range of services and products, there are several areas where the company does not currently operate. These include medical imaging services, surgical procedures, pharmacy services, rehabilitation therapy, home healthcare services. In summary, CERIBELL Inc. is a medical technology company that specializes in developing innovative EEG solutions for patients in acute care settings. While it offers a range of products and services, there are several areas where the company does not currently operate. Unknown maintains a market capitalization of $1 billion, broadly in line with the industry peer group. Unknown trades at a higher price-to-book ratio of 4.04 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 21% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company are multifaceted and influenced by various factors. On the growth side, product revenue from wearable devices such as disposable headbands and head caps has been a significant contributor. Additionally, subscription revenue from monthly fees charged to hospital customers for use of Clarity recorders and portal has also contributed to revenue growth. The adoption rate of the CERIBELL system by hospitals, expansion of direct sales organization in the United States, and regulatory clearances have also played a crucial role. Furthermore, market size of acute care facilities in the U.S., international expansion through CE Mark in Europe, and increased revenue from EEG recorders and wearable devices sales have all contributed to growth. On the other hand, factors such as inability to manage expansion effectively, strain on resources due to rapid growth, fluctuations in quarterly and annual results of operations, and potential modifications to pricing and reimbursement strategy or business structure have led to revenue decline. Ultimately, market acceptance and adoption of the CERIBELL system, size of customer base, ability to acquire new customers, and success of marketing efforts are also critical factors that influence revenue growth. The net income and profit margins of the company underwent significant fluctuations over time. Initially, on page 30, there was a notable increase in net income by $5,100 million, representing a 28% change. However, this trend did not persist, as the company faced various challenges that negatively impacted its financial performance. On pages 38 and 39, the company reported a net loss of $19.7 million due to significant losses from developing the CERIBELL system and related algorithms. The net income continued to decline on page 40 due to decreased demand for products, increased competition, and higher costs. Furthermore, on page 41, the net income was negatively impacted by increased tariffs and trade restrictions. The profit margins also experienced changes throughout the period. On page 30, there was a decrease in gross margin by -1%, while product gross margin remained unchanged at 0%. However, subscription gross margin decreased by -2%. The company's profit margins continued to decline on pages 40 and 41 due to various factors such as inventory write-downs, excess inventory levels, reserves, and volatility in operating results. The potential loss of reimbursement from third-party payers also contributed to the decrease in profit margins on page 45. Additionally, on page 46, the company's profit margins may be impacted if prices are lowered to maintain customer adoption. Finally, on page 48, the profit margins may be affected by healthcare policy changes, including reduced reimbursement levels for products. In summary, the net income and profit margins of the company experienced significant fluctuations due to various challenges such as decreased demand, increased competition, higher costs, tariffs, trade restrictions, and potential loss of reimbursement. These factors contributed to a decline in the company's financial performance over time. The financial performance of a company can be a crucial indicator of its overall health. In this case, the company's operating cash flow has been a concern in recent years. For both 2025 and 2026 periods, the company has reported negative operating cash flow. This means that the company is not generating enough cash from its core operations to meet its financial obligations. The negative operating cash flow can be attributed to various factors such as inefficient management of working capital, high operational costs, or inadequate pricing strategies. Whatever the reason, it is clear that the company needs to take corrective measures to improve its operating cash flow and ensure long-term sustainability. The company's debt level has undergone a notable change in recent months. As per the financial records, there was a decrease of $3,202 in the company's debt from December 31, 2025 to March 31, 2026. This reduction is a positive indicator for the company's financial health. However, upon closer examination, it appears that the carrying value of notes payable increased by $106,000 during the same period. Despite this increase in carrying value, the principal amount of notes payable remains stable at $20 million. This suggests that while the debt may have appeared to decrease on the surface, the underlying values are more complex. In terms of interest expenses, there is no clear indication that they have changed significantly between 2025 and 2026. The financial records do not provide any substantial evidence to suggest a notable increase or decrease in interest expenses during this period. Management is optimistic about the company's outlook, highlighting several key strategies for growth. The primary focus is on developing and releasing new features for the CERIBELL system, expanding into new indications, adjacent markets, and international markets, and improving product and technology, including AI-powered algorithms. The company aims to become the standard of care for seizure detection and management in acute care settings, and plans to expand its direct sales organization in the U.S. Management also notes that revenue will fluctuate due to various factors, but expects growth through continued investment in research and development. External factors such as government shutdowns, increased interest rates, and supply chain constraints may impact the company's business. However, management remains focused on expanding market presence, improving product technology, and driving innovation to achieve long-term growth. Based on the provided information, it is clear that the company has a conservative approach towards shareholder returns. As of March 31, 2026, the company has not paid any dividends to its shareholders. Furthermore, there are no plans for dividend payouts in the foreseeable future, as stated on page 23 and reinforced on page 77. In addition to this, the company has also chosen not to repurchase shares, a common practice among companies looking to return value to their investors. This decision is also reflected on page 77, where it is explicitly stated that the company has never bought back any of its outstanding shares. Concerns about inventory buildup and supply chain disruption have been raised. Inventory buildup is a specific concern, as seen in the significant increase of $173,000 in component materials, while finished goods decreased by $559,000. This discrepancy suggests that there may be issues with managing inventory levels. Supply chain disruption is a more widespread concern, mentioned on multiple pages. The potential for tariffs, labor costs, geopolitical conflicts, and supplier/contract manufacturer costs to disrupt supply chains has been highlighted. Additionally, logistics challenges, fluctuations in labor availability, higher raw material/component/logistics costs, and the inability to raise prices sufficiently to keep up with inflation are also concerns. These factors could have a significant impact on the company's business if not addressed. That concludes the financial summary for warning all attempts failed. Could not retrieve company long name, CBLL. Feel free to comment below, and I will be happy to answer them when possible.